What's up, everybody? Welcome back. Today we're going to have a very different episode. Are the bears in control? We're going to take a look at the chart here. We're going to figure out, are the bears in control? Are the bulls still around? The chart will let us know. Real quick, thank you to everyone who's been liking and subscribing during these streams. Last video I asked you to watch the video to the very end because it helps YouTube recommend this video to new eyes, and guess what? We shattered records. So thank you so much, guys. Please watch this video to the very end. Leave it on even if you're not paying attention. It doubled the amount of eyes that YouTube showed that video to, so you guys rock. Let's go. Looking at the weekly here, this is not really what we were hoping to see. 42.2 has broken. We have seen trading farther down, and in fact, this weekly candle has for the first time back tested the 20 weekly moving average. This is not a great take. We lost a support level that we were really hoping to hold, and now we're going to take a look at what we can expect into the new week. We briefly traded below a very important level, and that's 41.5. That is the bearish engulf monthly level. Last month opened at 41.5, and in this month we have traded lower, but we've seen buyers come in. This so far has not been the bounce that I would really be looking for here. Not enough follow through yet. We do have 5 days left in this week, and we still could see upside, and we could even potentially still see a close above that KJ level that we've been watching at 46.9. Something that you guys need to take note is in the last episode, we were looking for 46.9 on the weekly close and 47.9 on the daily close. Now, the weekly did get it, but the daily did not, just short of 47.9, and maybe that's why we're seeing this downside. However, this doesn't impact the bigger picture quite yet. If we get a deep close on this weekly, that could spell for further downside. While this isn't what I would prefer to happen here with price, let's take a look at what we saw last stream. Would that scare you? Would this spook you? That would spook me, actually. Not actually spook, but that would be uncomfortable. You know, people are looking bearish or looking for downsides. So let's give the people what they want. Where would we look? Let's use our fib tool. Let's fib it out. When in doubt, fib it out. There you go. There's your measured moves. If we see this being our swing low, this being our swing high, and we see a measured move, there you go. Just under 40 and 37.6 for the 1618 and 2. But you can see actually here, if it does move to that measured move, target, pretty much just double bottoms here. This would be exactly the same. Exactly the same. You have your shelf, and you have your shelf. That'd be wild. What if we then saw another iteration of it? How freaking cool would this be? We are constructing additional pylons. Oh, what would that be? Oh god. I'm seeing nightmares now. I'm seeing nightmares. Let's make it to like the golden. Yeah, it's already at the golden pocket. What if it just kept getting smaller and smaller forever? That was basically a fib extension from our swing low on September 6th and our swing high on September 18th. And that was implying that we may see levels as low as 39.6, 37.6 for our extended measured move at our 2 Fibonacci. Something interesting is now in play. We did this literally yesterday. Maybe we take a look at it again today. Could we possibly be seeing a fractal repeating? Starting from the beginning of the year, we're seeing a structure very similar to what we're seeing now. If this is to play out, what we would expect is some kind of weak recovery rally, similar to the 42K move back in June, followed by slightly lower lows. I think that would bring price down to that 37.6 level. Unfortunately, our 42.2 stop on our in-stream trade was hit, and that's not a great sign. As I've been saying, we're in a clear uptrend until 42.2 breaks, and unfortunately, it broke. So now it's time to start entertaining downside. This doesn't necessarily mean we're in a bear market. However, it does put the bulls in a defensive position. What we're going to hope for here is to find support down near that 40K level. I'd like to see a stronger response rally and a move back above. And what I would specifically like to see is today's daily candle close above 42.2. Now we are trading at that level right now. There is too much time to call it quite yet. Hope is not lost. However, it is time to put our caution hats on. We are in the danger zone. We really don't want to see a daily candle close below 42.2. In my mind, that means we are looking for that 37.6 level to double bottom, potentially at the swing low in early August. Guys, stay strong. If you're a spot holder or investor, this move is meaningless to you. If you're a leverage trader, good luck. If we see this pattern play out, that's going to be a nightmare for leverage positions. As always, guys, happy trades. Hope everybody's having a great day. Don't be too afraid. I know there's a lot of macro market stuff going on right now that's freaking everybody out. You guys know Bitcoin never gives up an opportunity to ride the coattails of the rest of the market sphere. That's all for today. Crown out.